What's up, everybody? Welcome to Trading Futures, the basics. And of course, today we're going to talk about the day trading of futures and some swing trading of futures. And if you want to learn how to day trade yourself, or if you want to use my advisory, but I'll give you the basic nuts and bolts of it all, so you have it. And hey, Kurt, and if you is he still talking? I'm talking now. Yes. This is recorded. Yep. Everything I do is recorded. Just keep me out of trouble. But we'll go through everything, and I'll answer all of your questions. So don't leave early. Even though I'll offer you something at some point during this presentation, don't leave early, because I will answer every question and I'll answer it straight up. But anyway, so without further ado, let's get started. And one thing is, the first thing you always got to know is there's always going to be losing trades. Success is not given, it is earned, and the greatest barrier to success is the fear of failure. Okay? Keep those things in mind whenever you're trading. Right now, you don't need anything. Sit back, relax, and listen. And then if you come up with questions, fire away. Disclaimer, anytime I do one of these, I have to give you a disclaimer. I'm not going to read it, but there's risk in trading. Past results are not indicative of future performance, blah, blah, blah. And I'll leave it up for about 3 seconds. But again, that's, part of the thing. You got to know the risks. Okay. Now, one of the things we always worry about is emotions. And, if you remember one of my favorites, the Trading Places movie, fear, that's the other guy's problem. And that's the biggest problem that most have, including me, is dealing with your emotions while you're trading. Okay. So it's something that you just need to work on. That's something that can't be taught. You have to work on yourself for that. So today we're going to talk about what is a futures contract, why trade futures, what are the benefits, speculators, the zone, competitive edge, probability, strategies, margin, and then we'll take all of your questions, and there's a whole bunch more in there. But this is just a basic outline of what we're going to do. And the first thing that I always like to talk about is trading itself is a learned skill. Okay. Trading doesn't matter where you came from, who you are, what you do. Anybody can trade. Okay. But you have to follow the certain rules that make you a trader. Now, you can go to Harvard and have an MBA and not be a good trader. Okay. You can be someone who has a high school education and become a great trader. You don't even you don't need any education, basically. I mean, my son was a great trader before he finished high school. Okay. It's all about understanding that you're playing a game, and you're playing a game that is filled with probabilities, and understanding how to get those probabilities in your favor. If you play poker, bridge, backgammon, or gin, those are 4 games. There's more, but those are 4 games that the better player has the advantage. There's always elements of luck in anything that we do, but the skilled player, the skilled trader, will win over time. Okay. And it's, if you've played poker, I know some of you have mentioned it here, pocket rockets or pocket aces don't guarantee victory. They just put you in the highest probability chance to win. Right? But understanding how those probabilities play out and then using them in trading become a more important skill. Okay. It becomes important to understand always about the probability and using the rest of the tools that go along with setting yourself up to be in the most highly probable spot. Now, what is a futures contract? Well, it's really just an agreement between a buyer and a seller, and like options. Okay, but the difference is that in options there's limited risk. When you buy an option, you can only lose the premium you paid. Okay, when you're trading in futures, in theory they can go to zero. Okay, they don't, but they could. So your risk is different. You basically have, in theory, unlimited risk. Okay. But you're making a financial commitment or an agreement to buy or sell something. Now, obviously, if you buy an option, you're buying the commitment to buy this product. But if you sell it, you're selling the right to deliver it. In the meantime, once you reverse, the trade is over, so that your obligations or your rights are gone. Right? So it doesn't matter. But the contract itself is much bigger than a normal option contract. But again, if you trade it properly, then it's really not. But that's really what you have to understand about a futures contract. pork bellies that used to be, this is from Trading Places, is used to make a bacon, lettuce, and tomato sandwich. And of course, they don't trade pork bellies anymore because the criminals on the floor couldn't stand it. They couldn't make enough. They had to take more, so they quit trading them. They took them off the board. But again, futures are commodities. They're all the same. Okay. They're all based on future movement. And of course, the original commodities traded, the original board of trade was made for hedgers. Okay. But I always laughed at that because when you talk about, if there's a hedger, somebody wants to hedge a position, which is what futures are used for in like farming and other areas. Well, there has to be a speculator on the other side to take the other side of the trade. So it's always interesting. And those are what we're talking about in the derivatives market. So futures are highly leveraged instruments. And just to give you a quick view, the simplest explanation is we've all traded options, I'm sure. So the spiders, SPYs, if you have one mini S&P that is the same thing as 500 shares of the spiders. Okay. One mini S&P is the same as 500 shares of the spiders. One mini Dow is the same as 500 shares of the diamond, and so on. But futures are much more liquid. Okay. Commissions and execution costs are much cheaper. Speculators I don't like to use the term fast money, but you can make money quicker with a lot less risk and a lot less exposure, even though the overall contract is bigger. Can a futures contract be exercised? No. Futures contract cannot be exercised because there is no option to that. Okay. When you're trading in the futures market, you are trading the absolute pure product. Okay. There is no exercise to that. Futures markets are more efficient and fair. Short selling is legal. Okay. That's why futures, out of all these you see on this board here, each has their own value system. Forwards, I hate forwards. I think they're phony, but forwards are what a lot of farmers use. They forward sell their crop or something to somebody, all right? But they're not on a regulated exchange and you can back out. Okay. Options are great. Okay. Depending on what you're trying to do. Futures are the best, but again, you also have swaps, and we know what happens with swaps. We saw what happened in the Big. If you saw the movie The Big Short. Now again, there's things that you can do, and there's things you can do straight up. But we've all just recently probably witnessed that XIB contract, which was a phony ETN that was by Credit Suisse that went kablooey. All right, we don't want to be in those types of positions. One future option equals one future contract. Is that a question or a statement? I answered your other question on the last call, by the way, big boy, about your $11 an hour profit. Why trade futures? Speculation futures offer the opportunity to place bets on future spot price of a commodity. Hedging futures offer the opportunity to hedge against the risk of the future spot price and the leverage. Okay, it allows you to leverage without the capital that you would need. If you were going to buy, for example, if you were going to buy 500 shares of the spiders, you would have to put up, if you're getting 2-to-1 margin, you'd have to put up 300,000. Okay. Excuse me. My mistake. You'd have to put up 60,000 to buy 500 shares. Okay. However, if you wanted to trade one futures contract, which is the same thing, you'd have to put up $500. Okay. Plus the fact that you wouldn't have to wait for Reg T and everything else to clear once you sold it. One option, yes, because the one option contract equals one futures option equals one futures contract, but they all have different sizes. It's not standardized like in options. One option equals 100 shares of stock. Obviously, feeder cattle is 50,000 pounds, fat cattle is 40,000 pounds, and so on and so forth. So they're all different. They have different structures. Now, the benefits of futures are they're very flexible and you get a lot of leverage. Now, again, I'm not a big leverage guy. I don't want you to over leverage yourself because you have it, but it does make it easier for you to trade in and out without having any issues. Liquidity and efficient execution. Again, basically in the futures market, you're giving up one tick. And obviously you have to learn what the tick size are of the different products that you're trading. You virtually have almost 24-hour markets. Now, again, markets are not always liquid at night. So I'm not telling you that you'd want to trade at night, but if they do become liquid, for example, during the Brexit, I always tell the story, but I traded for 36 hours straight during Brexit. I traded overnight during the election. When the markets do get a little more volatile, there will be more trading at night. And I'm not telling you that you should plan on trading at night. I'm just saying if you're available. I happen to sit in front of the machine all the time. You can buy or sell in any order, and you need low account minimums. You'll have to fill out something. Who's your broker? No interest charge on borrowing fees. Unbiased execution. Favorable tax treatment. Now, this is something you need to talk with your accountant about, but in futures, you use what they call 1056 income. Okay? It's a little bit different. TOS, you have to call them and arrange it, I think, but it's no big deal. It's not like they give you a test. And no broker or counterparty risk. Ninja's a good futures broker. I mean, they're all decent. You're really doing your own brokerage, okay? But Ninja is reasonable and inexpensive based on the others. And we'll get into price in a little bit a while. And it depends on the size of the account you want to open. If you have a bigger account, there's better, but it's not required. Price discovery, okay? Now, price discovery is the utmost importance in futures. That's how they determine. Everybody believes the markets are driven by supply and demand, but the fact is, other than options, everything else is traded off of a price discovery model. When the markets are going straight up, it means the buyers are being more aggressive and the sellers are stepping away, because for every buyer there has to be a seller. Okay, so it's not a supply and demand issue; it's a price discovery market movement issue. Okay, so learning that and understanding that is what it comes down to. Now, many of you get trapped in the option market because they have the other component of a supply and demand model, and the way that comes out is through implied volatility. So you sometimes overpay. Futures, you can't overpay. You may pay the wrong price, and they may go right against you, but you're not overpaying. You're paying what the fair market is bringing you right now. Okay, and you're not basing it. It's not a derivative model of another product. Okay. The futures trade exactly to the SPX and to the spiders. They all trade exact because they're not leveraged or they're straight up products. Okay. Whereas if you've noticed, options don't always trade that way. And that's just something, again, it depends on what your objectives are, which give you the best trade for what you want to trade. I love trading options, but options are more of an investment vehicle for a longer period of time. Whereas I'll trade futures. I trade futures on a 4-minute chart. And that's how I teach it, is on a 4-minute chart. But I also give out, on my advisory, I give out trades on a day trade basis, which are all day, and I give out trades on a swing trading basis, which is carry overnight. So again, it really depends on what you're looking to do. When I teach the part-time day trading, it's based on trading when you have time and spending an hour or whatever it is. And if the trades appear, then you make the trade. If it doesn't appear, you don't make the trade. But it all comes back down to the price discovery model. If there's no broker counterparty risk, in comparison, we're 4 times where are you unregulated? I don't understand the question. 4 times where you are I don't trade unregulated exchanges, so I don't know what you're talking about. They can be, yes, there's a question: are all futures 1056? You have to deal with your accountant on that, okay? But yes. Why day trading futures is the best option for an active or passive trader? Futures move directly in tandem with the underlying asset. Okay, there is no funny business going on. It's straight up. Because here's why. Because everything else can be arbitraged against something else. So if one gets too far out of line, you can put it back in line, and the market makers are going to never let it get that far out of line, because that's where they make their money. Futures have no restriction on short selling. Now, right now in the markets, there's certain stocks you can't sell, yada, 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 hard to borrow. They give you a hard time. Futures, you do whatever you want. There is no FINRA pattern day trading rule. So think about it. If you trade the spiders once or whatever, and you've only got a $5,000 account, you've exhausted all your capital and you're out of business for 3 days. Okay. Whereas in futures, you can trade 100 times a day if there's that many trades in and out. Okay, without ever having a margin problem or an issue with FINRA or getting the nasty note where you've exhausted all your day trading margin. Would you consider trading futures options? Do you prefer trading stock options? I prefer trading futures themselves. Again, it really depends on your objective. Okay, if I'm looking to put on a position and build the position, I will use options to do so, either future or equity options. If I'm looking to trade actively, I don't want to use options. I don't want to give up the premium edge. Okay. Classes start on March 7th is the next round of classes. Day traders can make use of lower initial margins for trading futures. Again, you can right now futures you can get for under $1,000 for day trading margin to control $150,000 worth of something. Okay. Some are a little bit expensive. It used to be 500 with standard, but I know some margins have gone up with the volatility coming back in the market. Okay. Now, we are speculators. If we're doing this, we are not hedgers. We're going to be speculators. And all we are, we're taking a risk to make money. Okay. That's really what it comes down to. But we trade back and forth in the market. We have no premium risk to the market. We only have market risk. Now, again, premium risk and market risk, when you have premium risk, you could also have market risk at the same time. Here you have just market risk, okay? And it's something that you have to learn to understand what your exposure is, what your risk is, and how to trade it. But we are speculating on future movement. We're not hedging. Now, some people do use futures, and I teach that as well in my hedging class, that you can use futures as part of a hedge, because really, what is an S&P future? Again, it equals 500 shares of the SPY. So if you want to hedge against the SPY, you could just use one S&P future instead of 500 shares. It changes the margin dynamics. It changes everything. But again, for here, we're speculating. Now, when I talk about the zone, all right, you want the trade setup to come in, and we have a specific setup for our day trading model. Okay, we're basically trading what we call the blow-off position, okay, which puts us in the edge of the market every single time. Now, it doesn't pay every single time. And until the last recent bout in volatility, in our futures day traders, we're averaging about an $80 loss per contract and making about $160 for winning a trade. Okay, so that has changed a little bit because volatility has risen. So both numbers have gone up. I just don't have the accurate figures because it's too soon to get the accurate numbers. But both numbers have gone up because of that. But if you put yourself in the right trade setup, which is the blow-off position for very short-term trading, you're going against the masses based on a mathematical probability. Notice how we get back to probability all the time in the math, based on the market conditions and a personal mindset that has no emotion. Okay, because again, I guarantee you're sitting there and the market's tanking. Again, you go, geez, I should sell that. But the point is you should really buy it. And I'll give you just a couple of quick peeks at what I'm talking about. And these are actual trades. Okay. Now here's the YM. Okay, this is the mini Dow. Now, this was a real trade, a real buying opportunity. Okay. Based on volume, based on the way that it came down. This was a real selling opportunity. Okay, based on volume, based on the way it went up. Okay, those are two trades that I made. All right, and of course, then it's how you manage them once you make those trades. Right, and again, they happen in all products all the time. It doesn't matter. Crude oil, Bitcoin, it doesn't matter. Euro currency, if they happen, and again, the trade has to appear. Sometimes the trade doesn't come. Sometimes you can sit there for an hour and nothing can happen. You don't want to force the trades. But don't trade without the edge. If you don't have a competitive edge, don't compete. And that's what we're giving. What percentage were wins in those numbers? The wins are about, it's about 50-50. Okay. I can't give you an exact number because everybody's different and each period is different, but you'll go through long winning streaks. The biggest thing I try to explain is you always know what your losses are, because our losses are very well defined to an exact number. We never know how numbers our gains can be. In fact, when I was doing the last session of our class last Wednesday that I just finished with, I actually I'll trade if there's trading going on. I'll put them on while I'm doing there. And actually, we made about $500 in gold. All right, while I was doing the class. But I also trade live on the jobs numbers every Friday. The jobs numbers. This will be the first jobs Friday I'm going to miss in forever. But we last jobs we actually sold the YM, and I didn't have to cover it until Monday. Normally if I was a day trader, I'd have covered it Friday, but I didn't have to cover it until Monday because that's how the pattern worked out. So it was actually like a major winner. But I don't count on those, but that's just sometimes it happens. That's how you manage the trades out. Now, day trading versus poker. Okay. Now, again, we don't know the number of opponents, but remember, there's always somebody on the other side of your trade. There's always somebody against you when you're trading. If you're buying, somebody's got to be selling. Okay. You have no control of the market. You only can control your own disciplines. Okay. You have the option to get in or out anytime you want. So there's a lot of very much similarities to the games because they are both games. That's really, again, as much as we want to talk about it, and as much as everyone wants to convince you that it's a major adventure, it's a game. If you learn the probability of your craft, if you learn the game the way it's supposed to play, then you're going to put yourself again in the highest amount of probability. If you put yourself in the best chance for probability, you're going to give yourself the best chance to win. That's all it comes down to. I do trade in extended hours occasionally. Okay, again, it's got to be busy enough. I'm not going to do it if there's not enough action. There's got to be volume and volatility. Good traders will focus on capital preservation and risk management. That's one of the first things you always have to do when you're trading futures. Remember, your money is your inventory. Okay, so you have to get paid for your inventory. And if you're giving it away, then you're not getting paid. Limit losses by setting a stop order. Every trade we make and we teach has a stop to go with it. Okay. Again, yes, sometimes you get knocked out. It happens. But at the end of the day, if you don't have stops, then you're opening it up to your emotion. Understand how to use the margin correctly. Do not overtrade. You don't get points for overtrading, but I teach you ways to set up to be able to be more active, because when you learn the base system, what we teach applies to every model, every chart. It doesn't matter. I can trade any market in the world as long as it's liquid. Okay, again, that goes back to liquidity. I can trade any market in the world. And in fact, I'll watch myself 32 charts at once. Now, I don't sit there and stare at them. I just look for some key things that are happening from within those charts. And if I can see it, then I'll focus in. But what I do like to get to, and what I try to teach, is I try to get everybody into about 4 or 5 different products at once. And not because I want you to trade them all at once, but because, again, the more that you can watch, the more opportunity that you can create. Okay, and that is the key to what we're doing, is the opportunities that we're trying to create for ourselves. All right, and for example, I'm just going to pull this over for you in 1 second. As soon as I get it to populate. Okay. So if this is one of my screens here. So if I'm watching, I'm not specifically looking at them, but what I'm looking for is if I start to see a stock or an option futures I'm watching starting to go in one direction, and I start to see volume pick up, then I'll know to hone in on that. But that's what I want everybody to do, is watch more than one at a time once you get used to it. Do you see the stops? I've heard they can. That's bull. I almost said it. I almost made this an X-rated call instead of a G-rated call. That's BS. They don't see anything. Look, if you watch the trade, market makers have an idea of where you set your stops. They don't know do you think they're looking for your one lot or your two lot? They call it sweeping the book. They're sweeping up and down, trying to take stops out who people that get too close. Okay, that didn't use a proper method of trying to set that stop. Okay, they cannot see your individual stops. I'm sure somebody can, but trust me, there's no benefit to them in doing that. How many miles you watch for 32? I actually am on one. Okay. Do banks see the stops? No. In Forex they do, but banks are on both sides of the trades. I have them in one. They're all squinched up in little boxes, but I can see them flashing. So that's why I know. Look, what charts you recommend for futures trading? What charts or what products, hon? Give me a better question. Don't be emotional. Okay. Keep a trading journal. I tell this to everybody, and everybody thinks I'm nuts. I'm just telling you that if you don't keep a journal, you're not going to learn. And if you're not going to get the edge, because you need to understand what you've done and how you did it. Luck is not a strategy. So there are many different strategies that are used in trading, and there's trend trading. Okay. There's swing trading. There's swing trend trading. Okay. There's gamble trading. There's momentum trading. There's counter trend trading, and then there's trading one specific pattern. Now, trend trading is trend and counter trend are opposites. Okay. The trend will make money less times, but make more of it when the market is trending. The counter trend trader will have more winning trades, but will not catch the big runs. At the end of the day, a good counter trend trader and a good trend trader will make the same amount of money, but one's just more active. And trend trading takes a beat. Trend trading sometimes takes a mental beating to people because markets do go up and down. They do change. And when they get in congestion, they drive you crazy. Okay. Swing trading is just putting on a trade for a couple of days, couple of weeks, whatever it happens to be. Obviously, gamble trading is gambling, and you're taking a shot. But we teach one specific pattern that is mathematically certainty, and the probabilities are extremely high. And if you follow all the other rules, it's going to make money, and it does make money. And I've got a lot of traders to prove that. Okay, but we're trading the blow-off pattern. It's a pure edge play against the world. You're fading the world when it happens. So it's a form of a counter trend trade. But as we all know, markets make sharp, jerky reactions and then they reverse. Is a stop? Never use a stop limit. If you want to get out, make sure you get out. The stop limit is a fallacy because if they jump your limit, and of course, in the way that things have been trading, they could jump your limit, you could be out and get smoked. You're not entitled to a fill if it's a stop limit order. If it's a stop market order, you're entitled to a fill. And trust me, you are not going to get hosed very often in futures on your stops. Okay? You just have to take my word for that. But day trading is just trading for the day. Okay? And that means that if you're day trading, you're not carrying overnight positions. This is one of the fallacies and one of the problems that traders run into is when they start from day trading and then they have a losing trade, they want to carry it overnight and hope it comes back. Okay. That is not what day trading is about. Day trading is about you go in, you put your key in the door, you open up your office, you've got no inventory to start the day. You go home at the end of the day, you lock the office, you got no inventory when you go home. And whatever you did in between is what you made money or made or lost money. Swing trading, you're carrying longer term positions. Okay. Trailing stops can be used, but I do not use, I do use them on occasion. Okay. But trailing stops, the problem with the trailing stop is let's just look at something real quick. Good thing I'm good at improv. Okay. Let's just say we decided to get short here. I could just, let me change my tool. Let's just say that here, let's say we bought here. Okay. Again, I'm just using a number. So I put a trailing stop in of whatever, and it goes up a little bit. Oh, I got a profit. And then it comes right back down. Because the trailing stop pulled up, it takes me out with no profit, and then maybe it goes my way. The only time that I use a trailing stop is when I get that nervous feeling like, should I get out and take my profits? Okay. So I want to get out here, and I only have one contract left, so I don't want to just pull the one. I like to, I like to be able to pitch out on the way up or the way down. But so now I got to that breaking point where I think I should get out, but I don't want to get out yet, so I'll throw in a trailing stop and I'll let the market take me out. Okay. Or sometimes I have a trade on and I need to go into a meeting, so I'm not going to be able to watch the market, so I'll put in a trailing stop then and let the market go as long as it can go. Oh, these are Thinkorswim charts that I'm using here today. I use Cunningham charts, which is from these guys. This is my main. Oh, sorry, wrong. I have 3 different accounts here too, so let me just put the right one up. These are my main futures trading charts. These are the fastest. This is the best setup, okay, and where I can crimp in the most of my stuff. And these also have charts that come with them if I want to use them. I use the Thinkorswim because I can put a bunch on one page. But again, you always got to make what's comfortable for you as well. Now, interesting enough, day traders and swing traders use very similar formations. It's the length of time what it looks at. A day trader, like we're going to use 4 minutes or 5 minutes to make a trade versus, for us, a long-term capital gain would be 5 or 6 minutes, whereas swing traders may be in for days or weeks. Now, just to give you the best example is when I traded with my partner, the Badger, he traded 4 or 6, I can't remember, 4 or 6 things on 2 minutes. I traded 10 products on 10 minutes, and we traded together 36 products on 30 minutes. Okay. So it just depends on what your objectives are. The shorter you can make time, the more opportunities that will present themselves. That's why we shorten time. It's to create opportunity. How far out you place a stop? Well, it depends on the trade. On my day trading, right now we're using. It's a little bit complicated, but it's just figure if I'm getting into if I'm buying, then it means the market broke hard. I'm going to use about 10 ticks below or 20 ticks below the low of that move, and that's where I get stopped out at. Okay. I have a mathematical formula. I can't do it all now because it would take more than 5 minutes to explain it, but we have a mathematical model that tells us where we're going to put our stops. So again, day trading versus swing trading is just simply the duration and how long you're going to hold it. And certainly if you have for example, you have a $5,000 account, you really can't swing trade. Okay. Swing trades requires a lot more capital because that $500, $1,000 day trading margin I told you about goes up overnight. Okay. For example, during the day, you can trade a mini S&P for about 500 to 1,000. I'm not sure what the exact number is right now, but let's say it's 500 to 1,000. Whereas is if you carry it overnight, that margin goes to 5,000. Okay. So that's why you have to be prepared for day trading versus swing trading. Swing traders need, in my opinion, a minimum of $25,000 to swing trade. Do you trade the 30-year bond? Yes, I do. I trade everything overnight. I mean, I day trade it too. I do both. Okay. But I do trade the 30-year bond overnight. The 30-year bond's not a heavy margin though. I mean, it's not the heaviest of margins. Volume and price is what we use. Correct. But there's a formula that goes with the volume and price, but that is correct. Don't confuse strategies. Okay. Again, don't mix and match what you're trying to accomplish. Now you can be a trend trader in your investment account. You can be you can be anything you want, but don't mix strategies. Okay. Don't change your mind in midstream. Don't turn a day trade into a swing trade. This is one of the biggest problems for all traders is we want to take the winners fast and put the money in our pocket, and then the losers we hold on to and it'll come back. Well, just take your losses and forget about it. Move on. Okay. The key to trading is to move on. So trend traders are trying to follow the big picture. Counter trend traders are trying to sell tops and buy bottoms within a range. Okay, all done versus technical analysis, but that's the real difference. It's trend trading versus counter trend. Counter is exactly what I said. You're going counter the move. So if you're using, any type of indicator or whatever, I mean, I don't use any, but if you're using any type of indicator, then right here, the market is trending lower. Okay. In this time frame. However, there are periods where there's counter trends happening. Okay. So people are trying to, buy here, sell here, buy here, sell here, and then it eventually breaks the trend, which is part of the phase of the market, which we'll get to momentarily. But margin calls, all right? That's why you got to have enough capital, right? Margin calls are not good. I mean, they're not expensive. They don't cost you anything, but they just call you in, they force you out. And that's when sometimes you see these wild movements in stocks is because of a margin call. What triggers an increase in margin by the exchange? You mean a normal, like what E-Trade just did in long term or overnight? Are you talking about the difference between day margin, overnight margin? Or are you talking about the difference in overnight margin that changes at certain places? Well, what changes the margin is the amount of activity in the market. It really is the fear factor of the brokerage houses. Okay. If they're getting concerned and they think the markets are getting too volatile, they're going to raise the margins, and they have the right to do that. It's not a government thing. It's their thing. Can I trade futures in your IRA? Yes. Complete novice, never traded, interested, but how to dip toe. First, understanding day trading futures. How long does how and where does futures trading capital come from? Is it lodged for use? Well, you have it in a brokerage account. Schwab has futures trading. How best to try and check this out? Understand liquidity. That's part of the class. I mean, I could explain to you, but I mean, I can tell you most products, the bonds, the 10 and the 30-year, the 10-year notes, 30-year bonds, all the equity products, all the currencies are all liquid. 5,000 if you want to be a day trader. Okay. If you want to day trade, you need 5,000. I mean, you can do it with less, but 5,000 I would start. I wouldn't try to do it with less, but you could. Is sentiment trading some kind of counter trend? I don't. If I'm day trading, I don't care what anybody. First of all, I'm on the news. I'm part of the news. In fact, I was on Fox twice yesterday, but I don't listen to it. I could care less what they say. I don't care about anything. I can read it in the tape. In fact, it was funny. Yesterday, I texted out to some people that the market looked like they were going to sell off right before the FBI announcement came out. Now, I didn't know that the FBI was coming out, and boom, just like nothing, it sold off. It's all in the charts. Margin calls are you're borrowing money from a broker to carry a position, and if you don't have enough money to get to meet the requirements, you get what they call a margin call. They call and ask you, are you going to get out, or are we going to get you out? Okay, thank you. Can you tell us a good trading platform? Yeah, I'll give you those later. Can you use the same? You can say that you can use the same account at TD to trade futures and to trade options. Yes. Would you recommend trying to hit the bid ask prices? I don't actually do market orders, but I simulate market orders. Okay. In other words, let's just pull this up again real quick. So if the market was 67, 86, 50, 66, 86, 75, I would pay the 75 as if it was a market order, but I wouldn't set it in as a market order. Okay. All I do is I hit the offer, but I'm not going to chase up the offer. It's my largest account. I hope it's your best account too. Margin is simply refers to the amount of money that you need to have in your account. For futures, margin refers to the minimum required balances to place a trade. It is good faith money. Margin requirements are for most futures range from 2% to 15%, and of course the like Bitcoin was 150%. Now, the phase of the market, which is something that's very important to what we do, because I teach this in every class, but we break the market down into three basic phases, okay, and we call it universal price. All right. And all that universal price means is all charts are the same, all patterns repeat themselves, and the markets always do everything. They all do the same exact thing at some point or another. And the first phase of the market is what we call consolidation or congestion. That is the time of most uncertainty within the market, where the markets are chopping back and forth. Secondly, the markets will break out to the trend, whether it be up or down. They break out of that consolidation range and they start to move. And then the last phase is what we call a blow off, which is when everybody's panicking. I can feel it. They're panicking. They feel it out there. Either they're greedy and they're driving them up, or they're panicking and they're driving them down. Either way, that's our key trade. We're going to go against whatever they're doing because we've got a mathematical probability model that beats what they do all the time. Brokerage, somebody's asked the number of that. So brokerage is, again, Schwab has it. Thinkorswim has them. I'm not sure if E-Trade has them right now. Interactive Brokers, Ninja, and then there's a million of them out there. I prefer Ninja is one that I recommend, and I have another one which I don't give out because you have to tell me how much money you're putting in, because it's my wholesale brokerage. They want more capital before they let you open up there, and I wouldn't just I have to that has to be given from me personally. It's where I trade. It's where I've traded for 38 years. Okay, but they require more capital because you're basically getting a wholesale deal. But wherever you trade, you should not pay more than $5. If you're self-directed, which is what we're doing here, you should not pay more than $5 for round turn. Okay, which is a hell of a lot cheaper than stock. Now, I also have the option here, if anybody likes the futures model and wants to trade my advisory, I do have one place that will auto trade it for you. Okay, and basically they're using the exact numbers. So it's a great alternative if you want to be in the futures market. Is your trading focused on long or short time frame? Yes. Depending on what you're doing, let's use the futures day trading. It's on the very short time frame. Okay, but we do all. You use technical or fundamental analysis. I use no fundamental analysis when it comes to trading futures. I could care less. Price is all I care about. Time and price is the only thing that I worry about. The only time I use fundamental analysis is if I'm looking to invest in something for the long term, and I want to make sure that what I'm buying into is fundamentally solid. I would never buy off of fundamentals directly. You have a special knowledge of futures. You need no knowledge. You need to know how to read it. Look at a chart. Do you always use a well-defined trading plan that will follow without fail? Yes. And you should have more than one plan, because day trading futures is not the same plan as investing in your 401k. Geez, Russ, I thought you got mad. You were gone. Now you're back again. TradeStation's fine. I used to use TradeStation. Which brokerage does the auto trade? Money Block does that. Is there any tool I see to order and quality lined up? Noticed on DX getting pounded with the other night and watched the bid ask quantity, but never got over 5 or 10, but asked randomly. That flash is more spoofing than anything else. Okay, that's the computers at work putting in big bids and big offers. And there's just an old saying that market goes to size. So typically what's happening, if you see a big offer show up, that really means that person's really trying to buy, but they're trying to keep a lid on it. And they're trying to convince some rookies to go there and sell because they see that big offer. Okay. The jobs number is fundamental, but I'm not trading the number. I'm trading live into it. Okay. It's a good question. I'm reacting to the number when it comes out. I half the time don't even know what the number is. I have to ask people what it is. We're trading specifically the chart. Okay. I don't care what the number is, honestly. I mean, I happen to say and knew that number was going to create a sell-off, but I don't care about that. I had no idea what it was. I would never trade on any fundamental news, because by the time I get the trade, I'm a loser already, because 9 billion people already know the answer to that. Does your trading process recognize the market trend? We don't care. Does your trading process work well? And my trading process works well in all markets. This process works in every market. It doesn't matter. Do you have a proven trading process that applies to futures? No. It applies to everything. Efficient markets, centrally regulated exchange, low commissions, 24-hour trading, all electronic trading, and leverage. Trading hours. Anytime. Again, we have an advisory. Okay, I send the trades out at about 5 o'clock in the morning, Central Time. Okay, if that market's open, you can enter that order right then. That's what we're looking for. Okay, each market has its own hours, but the major ones are open about 23 and a half hours a day, give or take. All right, meats are only open. They still have the country club in the meat business. They're only open from 9:30 to 2. Everything else is some other nighttime components. I have a few questions regarding the trades you have posted in the day trade area. There are 3 new trades. What time these trades were taken? I'm trying to look at the chart to learn from them. Also, at the bottom of the page, for swing trades, there are a few trades with no stops. At what point do you play stops? I sent that for in Vegas. Okay. The day trades are based on price, and if they don't fill, typically they don't fill by about 10, 11 in the morning, but probably by 10 a.m. in the morning, I'm going to cancel them because it's too late. It's already too late. The swing trades, I don't always put stops in because I'd like to hold them, but I did learn my lesson, so I now start using stops a little bit more frequently because we took a beating on a trade that I let get a little bit too far away from us. All right, which I'll explain that later. But in the meantime, it was something that I do for myself, but I shouldn't have done for everybody else. Hi, Todd. At what point should I go from 1 contract to 2? Started the program with 25,000, now 42. Typically, you want to go up as your account goes up, and typically, I'd like to, if you go up 50%, I would go up 1 contract. But remember, the same applies to the downside. Okay, if you start to draw down, which you're going to go through a drawdown period, you go down. So if you let's say you take a $5,000 account and you go up to 7,500, then you can go to 2 contracts. But if you drop back down to 6,500, you got to go back to 1 contract. Okay, you got to manage your position as you go up and down. The ladder where you place the orders. Should you trade Sunday with? I'm going to trade if there's business. Okay, again, I'm always in front, so I will trade Sunday night. I think it might be busy. I'm always wondering about these holidays, but if there's something to do, I'll trade. But I'm not going to trade if there's nothing to do. Nolan, is there another part that there it is? What about the non-farm? I trade that. Yeah, I trade them all. I trade all the time. I trade every day. I trade every day, all day. Okay. I trade from my phone. I trade from whatever. Again, as long as the market itself is liquid, as long as there's enough volume, as long as the pattern appears, I trade. Okay. I mean, I don't trade at 1 o'clock in the morning because I'm not up. But if I did wake up, I would go trade. I mean, I have actually woken up in the middle of the night and looked at my phone, so it was busy, so I got up and go trade. It depends on what kind of margin you're talking about. If you're talking about day trading margin, then you have to look at the individual brokers. The CME, CMEgroup.com has all their futures listed there, what the actual margin requirements are. Was oil where you took a beating? No, it was actually in the Dow. Oil I've done very well with, actually. But I have taken a beating in oil in the past. Will futures trading close at 11 Central on Monday? Yes, it does. They're only open to accommodate London. You place your order on the price ladder. I think I answered that right. Okay. Learn from the winners. Okay. Again, just remember this: it's better to wish you were in a trade than to wish you were not. Okay. This is about your future. All right. You see that smiling, good-looking guy right there? That was 1987, October 19th. That was out of Time magazine. Forget what they told you. You want to follow the money, which is what we do. All right. You follow the money. So why is futures the best? Okay. Because we went through this earlier, right? Everything is in your favor in the futures market. Okay. Now, one of the things we have not made this available to the public yet. Okay. Did you answer my question? I said Ninja is a good futures trading platform. I said that I think they're all good. It just depends on what you want to get. I mean, Ninja is the best bargain for the small trader. I have a connection. If you want to email me, I'll send them to you. You know, I get nothing out of it, but I'd be happy to hook you up with the right guy with my connection over there. Just shoot me an email at bubba@bubbatrading.com and tell me, and I'll give you his information. So this is something that I do, and this is something that is going to be added to our advisory service. All right, I monitor a couple of my portfolios, which are always either long or short futures. Right, and there's a $270,000 portfolio, okay, which trades 29 markets. All right, and these are the actual stats. You'll see the equity curve. Okay, here's the equity curve here from the 270. Okay, you can see it chops up. You know, it doesn't go straight up. And here's every trade since last year. Okay, and this is strictly a trend. This is like buying a stock, except that if it reverses, we'll reverse. Okay, and I have that as low as a $25,000 portfolio. You can see the number of products that are involved are a lot less. Okay, because obviously it requires a margin. The overnight margin on this portfolio is 9,100, and if we need more, obviously you have to have enough notional value. Is your live trading event jobs numbers associated with the class? It goes to the class. If you're not trading if you're not trading yourself, and I'm doing the trading, then the jobs number isn't important to you. If you're trading in the class, you need to make sure that you understand how the model works. So I do that for you. I actually trade now. What we do as part of the class is every week I put up the on demand and teach, and then go back and forth to trading at the same time. Plus, I trade live if there's something to do. TOS, if you have a $25,000 account, they give you day trading margin, but that's why Ninja is better. Okay. TOS, if you don't have a $25,000 account, they will not give you day trading margins. I like your style. I just trade bonds. You've helped me make money. I'm glad. I'm happy. Do you add contracts in a trade? I never add in a trade in a current trade. No, I don't add because I don't want to. I'm not going to sell more or buy more. I'll just manage what I got. But this is going to be an advanced thing for a later futures class, which anybody who's taking it will get this class for free later. It's not ready yet, but there are things I have to get everybody up on the same page if I can. There's other tricks I can give you, but I got them. I can't give myself a mental breakdown. Are ICE products okay to trade? ICE are fine, except that they're ripping us off now. They want like extra money for brokerage fees. Okay, so I can't. I don't trade any ICE products anymore because I'm not paying for their stupid fees. Is your live trading event jobs number associated with the class? Yes. Okay. Ninja. Like I said, anybody who wants Ninja, just email me. I'll give you the contact. I have a contact there to make sure you get taken care of properly. I've helped other people who had problems in the past. Okay. And then here's how this works out. Okay. And again, these are the same. You see the equity curve, obviously not straight up. Now, another thing we just offered, and this is, nobody even knows this is going to be here, and I don't even have it in the right place, I don't think. But I've actually automated the pattern we teach. Okay. And everybody wants this. Now I've only got 2 spots for this right now. This is in beta testing right now. Okay. I originally had 10. I have 2 left. Okay. This is automated that shoots you a trade right on your computer. It tells you the trade when it comes up. It's a blow off pattern. For example, yesterday it traded 8 contracts total based on a 1 lot, lost $123 yesterday. Okay. And since January 1st, it's made 423 trades, 224 winners, 199 losers, total profits, $5,200. Here is a breakdown by product of what we traded. And we're going to add bonds, and we're adding everything to this eventually. In the meantime, if you're interested, and I don't even have a link for this, but if you're interested in this, I've got a spot for 2 people if they want it. It's $200 a month. It's going to be more later. For $200 a month, you get all the products that we trade, and eventually this will actually be able to robo trade itself as well, right on your computer. You won't have to touch anything. But in the meantime, if you're interested, you have to email me. I don't have a link for it, but it's $200 a month on a beta tester, and you can keep that rate for life. But it's going to be much more expensive when it actually goes out because it's obviously very successful, and it takes a lot of the stress out of trading. But in the meantime, the advisory service that I offer is I send a written update every single day about 6 o'clock in the morning. Okay, I give you information, and then of course if there's an update, I will update it. Plus, you get text updates and alerts as well because we do, and in this we do day and swing trades. Now again, if you don't have enough money, you just do the day trades. Like yesterday, this is yesterday's. We had the Australian dollar, which did not get filled. Corn did not get filled. We did sell soybeans, which made a couple $100. Should have made more, but I couldn't get to a screen fast enough to take them up earlier. But in the meantime, we did it, and that's it. And we have swing trades, which we carry for a longer term of time. Right now, we have no trades open right now because we're now flat looking to go forward. But if you look at the track record, okay, this is the day trading tracker. This is day trades only. Is $8,500. Okay, since we started, and for the swing trading is 13,000. Now that was a lot higher, except I had a meltdown on the Dow future. You can see it right here, 7,500. I should never let that happen, but I did. And I admit it. I'm a straight up guy. I tell you exactly what I did. I didn't try to hide it. There it is, right there for you. Okay. It got away from me. Okay. But this service is normally $150, I think. But for today, if anybody's interested, you can get the advisory service for $99. This link will be good through today. BubbaTrading.com/futures99. Okay, that gets daily updates and texts and emails and the trades. You get both the swing and the day, whether you can afford it or not. You get them both in case it ever comes to you. So that's for this class. Okay. And I get everybody's questions. I see a bunch up there. I'll get you all. Futures part-time trader. A new class begins on Wednesday, March the 7th. It's normally $1,800. Today it's $1,500, and you get 3 months free of the advisory service that goes along with it. You get 3 months free to go along with it. All right. So that's something that you can get, and that's BubbaTrading.com/futures. And then we didn't talk any hedging today, but my hedging software is trademarked. My hedging product is trademarked, and that class is starting on the 6th. And because I'm offering special everywhere else, the hedging will be $1,500 with 3 months free of the futures advisory service if you'd like that. Okay. Can you show the day trading tracker? Yeah, sure. There it is. That's through the 8th. 6 o'clock. You know my time. 6 o'clock Eastern time. You know my time. 445 trades. 445 trades. Is that what you're asking? If everything I do is recorded. Okay. I send like this, what you're listening to right now. You will get a copy of this in about, I don't know, an hour and a half or 2 hours from now of the recording. I will resend it out. Okay. Because there's nothing, sometimes recorded doesn't work, but everything I do is recorded. Okay. Because then there's never a he said, she said, and then everything is in black and white for everybody. How large is your portfolio for day trading track record? This is based on a $5,000 account, the day trading. We couldn't interfere with your golf. My God. I never let it interfere with my golf. If we have a question, I answer 200 emails a day. You can always email me. I'll answer almost within 5 minutes. Almost guaranteed. Monday through Friday, you'll get an answer usually within 5 minutes. Day trading. You guys are coming in so fast, I can't keep up. Also made good money in wheat and corn. Yeah, you're good. I love it. That's why you're a good participant, my young man. Yeah, I know. I didn't send you the auto trade link yet because the minute you fill it out, the billing starts. And since Tom won't be back till today, I didn't want to start billing you 3 days in advance or 4 days in advance. Does that make sense, sir? I'm looking out for you, brother. Oh, the commission is based on my commissions are about $3 a round turn. No, the link is you have to. If you forget the link, I'll show it to you again. Write it down and click it, or email me later, and I'll send it to you again. Still looking for more opportunities to buy pullbacks, and I'm looking for opportunities to sell. I'm just trying to keep up with the questions. So you want when I showed this sheet you're talking about, right? Yeah. So this was the commissions on this would have been somewhere around 2,000 probably if you're paying the max. Yeah, that's correct. That is correct. That's on one contract based on a $5,000 account. That is correct. You can use Thinkorswim, but you got to have 25,000 to get the day trading margin. But yes, you can use them. I use it as a display model. How large your portfolio of day trading? 5,000. Owner for my golf league. Day trading class. It goes for 6 weeks, once a week, and then also one thing about my classes. Once you sign up for if you sign up for the futures, you get rights to come to every futures class for history forever. Okay, you get to come back because everybody always needs a little tune-up anyway. So you get to keep coming back and back to continue to learn because you know me. As you know, my dear, I'm a big educator and I want to make sure that everybody understands it. Okay. So yeah, once you come, you just get to keep coming back over and over again. But I'm pretty, as you know, I'm pretty thorough. 6 o'clock on Wednesdays is going to be the time, 6 Eastern. Minimum account size. Well, for beta testing. Oh, you can have any account size. That's up to you. The software is based on a $5,000 account. Okay. I just charge $200 a month as the fee, but it's based on a $5,000 account. So again, I got room for 2. If anybody wants it, that's it. Because again, we want to build it slowly, just like we did with the hedging software. I don't want a lot of people because I want to open it up, and we're going to have, when it's all done, it will have all the equities, which it has now, all the currencies, which it doesn't have them all yet. It has the euro only right now. It will have the yen and the Aussie and the Canadian. And I want to have all the grains and all the livestock. So eventually the master, because when it goes to market, it'll be sold in modules. Okay. Because I'm going to have to control the distribution to make sure about liquidity. So it's a cool setup. I'm living proof that anybody can do it. Yes, well, you're a pharmacist. You're a pretty smart guy. Right now, you would enter the trades, but eventually, next week, we're going to run it our own beta for having the computer enter. Let's see. Did I get everybody? I don't know if Ninja has a way to trade mobile. You would know more than I do. I don't know that much about them. I mean, I know they're good. I know I've used them, but again, I don't use them enough. But certainly, if you want information, you can send it to me, and I'll be happy to find out for you. Yes, once you join any one of my classes, you get to come back to all the classes. You know, in other words, futures. Somebody who started my futures course, which I just started a couple years ago, if I've done it 10 times, you could have come 10 times. You could get to come back to the class because, again, everybody needs tune-ups. You know, you're not going to learn it all in one day. All right. You know, I got 38 years, and the nice thing about my classes is they're always different. the PowerPoint's similar, but my thoughts are always different. So I teach it different each and every time. So you get to come back. What did you say? Did you say the class at 6 p.m. Eastern time? At 3 p.m. Pacific Standard Time. Okay. All right, kids. Well, again, if you're interested, if you want the advisory, it's $99 a month, bubbatrading.com/futures. If you want to learn how to trade and get 3 months free of the advisory, it's bubbatrading.com/futures. And if you're interested in hedging, it's bubbatrading.com/hedge, which you also get 3 months of the futures at the same time. In the meantime, the beta testers, if anybody's interested, you just shoot me an email and I'll look at it. But I'll send out the recording. If you have any questions, please send them. And you will have your advanced. My advanced course cannot be done until the people that are in my regular courses can understand those. So it's a couple of months away at least, because again, I will not teach something. I will not allow people to get into trouble. You can get enough trouble with basic knowledge. I cannot put you in a position to get in a lot of trouble if you don't understand what I'm talking about yet. So it will be there. All right, kids. Thank you so much. Enjoy your weekend, and say no work on Monday if you're off. Have a great holiday weekend, and thanks so much for joining. I'll see you later.